Good evening, TheoTrade. This is Corey Rosenblum, man. You're watching the Theo Nightly video for the 18th of March here in 2021, and the markets took a stumble today. What does that mean? And where does that leave us for our positions? When I say stumble, I don't mean the top of the market we're going to go back to here. What I mean is any number of examples, and I'll highlight just a few of them, from earlier in 2020 when the market got a little bit overheated and then pulled back quickly. And then remember this period in August, just about straight up, and that was a painful environment for just about all traders. It was painful for the shorts who were losing money to the upside creep. But it also was equally, maybe not equally, but still as frustrating for the bulls trying to get long a pullback or retracement that just would not happen. And then, of course, 2 days later, it was all over. And the similar type of rally, and then a few days later, over, and so on and so forth. And that's what we're looking at. That's the strategy, that's the play. Not to call the top of the market. None of them were the top of the market, but they were a point when the market was overheated, overextended, and slipped to the downside. That does give benefits, profits, and relief to the bears because at any point in time, a short position up in these extreme levels just paid off. But it may have taken a full week to get that profitable out or at least pullback. In the Nasdaq, it was a little bit stronger or more pronounced. And we can see again at the upside, we call it upside creep. We've used in the past videos the terminology that the market takes an escalator or the stairs to the upside and an elevator to the downside. And that's just kind of a cute little market axiom, but it does get the point across that this is the stairs. This is just relentless creep, but it was all gone in 2 sessions. It's all over. Every bit of it. Every bit of the upside gain was wiped away within 2 sessions and a little more just for extra measure. And that's where we are right now. Can't call the top, can't predict when the market is hitting the exact peak, but we can be ready. Now's not the time to get the shorts on. The time to get the shorts or the puts or the defensive plays on was earlier, especially in the Nasdaq, which continues to be a pocket of weakness in the broader market. It wasn't all bearish today, which is a little surprising. Looking at the top level numbers at the end of the session, the S&P was down 1% back to Don's 39.11. So 39.11, here we are, which is a great number to watch and reference and target and build intraday trades. The Nasdaq was off 3%. That's right there with the technology sector, XLK, that was off about 3%. And the quad Qs, I always say quad Qs, the triple Qs, the QQQ was off about the same, about 3%. But the Dow, that was only down 0.25%, 1/3%. And the Russell was there with the Nasdaq down about 3%. So we aren't seeing the same market. We aren't seeing the same things happen. In other words, we're not all completely bearish. That's okay. The financials are strong, and that's the only really bright sector of today. Industrials made a new high, and materials joined earlier. And again, don't let this slip by your trading. The Dow Mini Futures, or the Dow itself, the DIA, the diamonds, we don't really trade that much, but it's there, did make a new all-time high, especially a new 52-week high, but that does push us, or the Dow, into all-time high territory. And the market came back from that. But again, all this is what we call upside creep. Creep. But that can be all taken away in a matter of hours. Such is the market and this concept that we like to refer to as gravity, or the market snapping back like a rubber band. And again, if you're new to the market, this might not be a familiar concept, but markets that get overextended, even in the context of an uptrend, they don't go up and down. Prices don't go straight up. They don't go straight down. They wiggle and they swing. And something that gets overextended like this tends to snap back. That's going to be true in multiple stocks. Let's take a look at the stocks that led the market to the downside in today's session. Tesla was number 1, and that doesn't look like a lot in the grand context or the grand scheme of things for Tesla shares, but that was a trend day to the downside. If we look at the hourly chart, that is a downside gap of about $15 or maybe even $20 just about. And what those red bars mean was that every single hour of the trading session, Tesla made lower lows. It kept going down. And it closed the session near the 650 print. ConocoPhillips will be tied to what we'll discuss in a moment, which is another big headline, and that's crude oil. So ConocoPhillips was another trend to the downside, and that is a pullback or snapback, as discussed on the bigger picture, from an overbought condition. PayPal is similar to Tesla. And just again, looking at these from the percent change standpoint, NVIDIA, there is ExxonMobil, which is similar to ConocoPhillips. Netflix continues to be in this sideways trading range. And there were short positions to be had up at 560, 570 as the stock price rotates back inside the range. A lot of tech stocks actually are doing that pattern at the moment. While I have a triangle built in Apple, you can easily see this as we update it into 20 and 21 as more of a not triangle, just updating the charts with us here, but a sideways line or a sideways rectangle. And that's Apple. Amazon is not doing much different. So again, if you walk up to the random person on the street and say, do you think Apple and Amazon and all these big tech names are making higher highs with the Dow that's making higher highs, they probably would say yes, and that would not be correct. So that's what we're talking about. The technology sector is weak within the broader market, and that's not what most people expect, especially the retail investor who doesn't look at the market on a daily basis as some of us might. That's okay. There's no reason to watch the market every single second of the day, but most people that don't have familiarity would most likely assume that Amazon and these tech names they hear so much about are right there at all-time highs, but that's not the case. And as we move from Amazon, just looking at some of the technology leadership names, we can see Google or Alphabet, which was strong, and that is a stock that is making or near the highs. But tell me how to trade this. Google or Alphabet shares, it's staying within this very, very wide range of $100. But look at the gaps. Look at the intraday movement and look at the opportunities. There isn't much there unless the trade setups are very, very, very short-term in nature, or what we might call fade trades, to fade short or purchase puts against 2100 and then target either the midpoint, 2050, or maybe even down to about 2010. But that's just not many traders can do that type of active scalping or what you might consider video game type of reflexes to get profits in a stock like this. There are always other names. But on the flip side, again, we saw financial strong, U.S. Bank Core. We had MetLife, it's insurance. We had Bank of America, Wells Fargo, and of course Lockheed Martin is not financial, J.P. Morgan, and we'll take a look at some of the others in these lists. And these are not necessarily stocks making new 52-week highs. If you want to see just the number of stocks making them, again, the Dow made the new 52-week highs. 90 stocks in the S&P 500 joined to make new 52-week highs. And that's on a session that the market reversed powerfully and slipped to the downside. Could not do tonight's video without discussing, at least for a moment, two things. Crude oil, which has pulled back again, not as dramatically or not as large a percent function of the market. Market was down 3%, at least the Nasdaq and the Russell. But crude oil was more than double that in terms of percent losses on today's session. At one point it was down 8%. That's crude oil. And again, all the gains that took place from early in March are now erased. And were erased in about just one session. And again, within a few hours in that session. So crude oil is getting a quick, violent elevator ride to the downside. And that played a lot of influence in some of the main names in the energy sector. Again, energy itself, the ETF, was off about 5%. And the one other thing to mention is that the bond market tumbled to additional new lows. This is the ZB, which is your 30-year bond, ZN, and then TLT, which is a tradable. All of them are tradable, but this is an ETF that is very popular. Now, I did come off the expected move, and so we'll use this logic by the end of the video to think about TLT. I drew that as a large red line, and we'll take that off just to get this clear for the video. But TLT had its low of day into the auto-generated expected move. Bond market's not that far away, or at least the ZB and the ZN. So like anything, if this is going to rally, the logic is going to be the same as right here. So when the market hit that lower bound, it bounced up a little bit, not the bottom, right? Not the end of it, but it gave short-term traders a little scalp or a play to the upside. And if the stock market is going to fall a little bit or slip a little bit further, the logic would suggest short-term that bonds might bounce in that environment. But as always, be careful and safe. This is Corey Rosenblum with tonight's Theo video update for March 18, 2021.